Lead with AI-driven strategy. Ignite digital growth. Streamline operations. Outpace the competition. Global MBA in Digital Transformation with AI. Enroll now.
Hello everyone. Welcome to today's session, Digital Transformation Strategies in Traditional Banking. Thank you for joining us. In this masterclass, you will discover how digital transformation, innovation, and strategic leadership are not just changing, but actively reshaping traditional banking. So we will focus on how these elements help build financial services that are more adaptive, hyper competitive, and truly customer centered. I'm Thaisa Figueroa, your host today, and I'm really excited to guide you through this session. Today, I'm Institutional Relations and Program Owner here at ZIGURAT. And if this is your first time with us, here's a quick introduction to ZIGURAT. We are a leading online educational institution with over 20 years of experience in e-learning. Our programs cover architecture, engineering, and technology management, helping professionals worldwide boost their careers and prepare for the future. And we are proud of our truly global community. We have more than 20,000 students from over 120 countries. So at ZIGURAT, we believe in unlimited possibilities, unlimited knowledge, unlimited future, unlimited success, leadership, and imagination. And this spirit of limitless growth begins right here with all of you. Peter, I always like to ask the audience where they are joining us from today. I'm talking from Barcelona. I'm Brazilian, but I live here in Barcelona. So I would like you to, if you can, share with us in the chat, where are you joining us from today? Let's keep the energy high and stay connected throughout the session. So I hope you can answer us, send us where are you joining us from here in the chat. So today's masterclass is directly connected to our flagship program, the MBA in Digital Transformation with AI. This MBA is where innovation meets implementation. In just one academic year, fully online and in English, participants earn a double degree from the prestigious University of Barcelona and also from ZIGURAT Institute of Technology. The program is specifically designed to equip professionals to leverage AI and digital strategy to reshape their business, career, and mindset. So before I introduce our speaker, I want to briefly highlight the core structure. So our entire curriculum is a journey. Every module is directly related to development of a final master project that's leading a full-scale digital transformation initiative in the real world. So the students move step by step from foundations to strategy to future vision, ensuring the participants gain practical skills in AI, digital strategy, and emerging technologies. So this fully online MBA prepares the students to lead these crucial initiatives focusing on three core pillars: strategy and leadership, technology and data, and innovation and change management. So the next edition begins in November 2026. If you want to transform your career, feel free to scan the QR code here to request more information. We will be super happy to provide you with all the details that you want. And now, it's my great pleasure to introduce today's speakers, Petar Stefanovic.
Very good.
I try my best, Peter. So Peter is the head of digital ecosystem and cards development division at
Moldindconbank.
Yes, he's an experienced professional focused on banking and finance, specializing in digital transformation, organizational change, and business improvement. He's also a successful alumni from our MBA here at ZIGURAT. So before I pass you the floor, Peter, a quick reminder to our audience, feel free to send your questions in the chat. We will address them at the end, okay? During the Q&A session at the end of the presentation from Peter. Peter, welcome. Thank you so much, and the stage is all yours now.
Thanks to everyone who joined us. Basically, I'm the alumni of the ZIGURAT and University of Barcelona, and it's one of the best things I did doing the MBA for different reasons. So a little bit about me. So Thaisa covered what's my current title and my current job. Basically, I'm currently in Moldova, originally coming from Serbia. A little bit more than 20 years of professional experience, most of it in management roles, worked in various countries, covered 10 different markets. Did most of the things in the bank, in the banking, which touches the end customer, meaning I was never risk or finance. Thank God, because this is something definitely which is not for my type of personality. But amongst other things, sales development, product development, and in the last 10 years, change management and digital transformation. I hold 3 master's degrees, marketing, big data, and finally my favorite, the MBA, which was done with this institution. To start. So I would say that we should start from the very beginning. I mean, how the digital came into banking. It came into 60s. Slowly creeping into the banks with the mainframe computing entering the banks. And the first ATMs coming in 67 in UK. Then followed a couple of years later in the US. What was extremely interesting for me is that, which gives you a little bit of picture of innovation. The amount of time which passed since the first ATM was deployed to the next one being deployed by the competition of Barclays was not years, as I would guess, but it was basically a couple of weeks. So the competition never sleeps. They follow you quite diligently, and they have the copy-paste strategy in most of the cases. Sometimes it's you that is doing that, sometimes it's the competition. So in the 60s, it started like this, continued with the broader expansion of credit and debit card usage, and more ATMs starting to being used, meaning the networks became very global. In the 80s, finally, the core systems which we bankers know and work with became reality. And with the development of technology and something which will become internet very soon, the early digital communication started. 90s brought us the internet, and what was a very primitive beginning of the online banking, it was BBC boards and some I would say predecessors of what we know as the online banking, and the standardization started. In 2000s, the mobile and web banking started. Also, what would be considered to be primitive today, because it was SMSs, WIPs, and the web portals. More and more banks started using the web portals and offering them to clients. Truth to be told, they were quite bulky, non-user friendly, so the adoption was not so wide. But this is the beginning. What we see in 2010s is with the invention, with the placement of iPhone, and later the Android systems, the smartphone banking started as slowly becoming the primary banking channel. And the introduction of the mobile services started, such as in the area of payments, loans, and investments. What's really interesting to say during this period, even in the countries which were not highly developed, as you would expect, Europe, US, etc. Some versions of P2P money transfers were also developed in Africa, meaning that despite of the technological downside that exists in some of the countries, the progress continued, just in another form. What happened later in the next 5 years, so 2015 to 20, the famous open banking, became reality with the introduction of PSD2 coming to Europe and the rising of neobanks. Just a small comment on this period. Basically, the traditional banks were quite cautious, not to say afraid, but cautious of both the neobanks and the PSD2, especially of the PSD2 and open banking, because everybody expected it will totally rock their world. It will bite a huge chunk of target markets of the bank and the portfolios of the bank. As for the open banking, let's be realistic. 10 years later, nothing really happened. There is some higher level of adoption in UK, but all in all, open banking was just a nice utopistic idea, but you don't see a lot of that threatening the banks. As for the neobanks, I would say I changed my opinion since 2015 personally. Because my question was always what's next, and this is the discussion I had in 2016 in one of the conferences with now ex-CEO of Revolut, asking him what's next, because he was bragging how they managed to get another 100 million of venture capital, and they will invest it. And I wasn't sure where is it going, because to go into mortgages or cards seemed a little bit complicated, but at the end they proved me wrong. So Revolut is growing amazingly. Monzo N26 still exist and keep rising. So all in all, neobanks preserved. And what is the learned lesson from this is basically you have to be transparent with your customers, and you have to be top notch in the area of the client experience, the customer experience. What's happening since COVID until today? The omnipotent, omnipresent AI, embedded finance, mobile first, meaning that it's not only us using ChatGPT to ask for as a supplement to Google and to help us cheat on the exams. But also it's being used for very serious things like credit scoring, AML procedures, know your client procedures, and hyper personalization. We'll be mentioning that a little bit later. What could be seen that some of the embedded finance and the ecosystem start getting more present and more strong, and I think this is where we are all going if we want to remain relevant for the customer at the end. And the mobile apps are definitely, they are not becoming, they are currently the main channel of usage for the retail client, for sure. With some more progressive countries also giving the possibility of taking the mortgage loan over the app, which requires high level of digitalization of the state where the institution is located, but still it's going in that direction. So why the digital? That's the main question. Well, a couple of reasons, but the three main reasons I would say would be the changing of customer preferences. So we are all consumers, we are all clients. So the point is, if you compare the typical client profile 50 years ago and today, we're very much spoiled and demanding, comparing to what our grandparents were as a consumers or clients. A very good example for that is when I began my career, I was in project financing, and there was a very interesting rule for me why the shopping centers are not being built usually above the second or third floor. And the point is, like, nobody wants to go above that. So if you compare it to the how it was done 50, 60, 100 years ago, these were the department stores with 7, 8, 9 floors working perfectly. Today, people are too lazy to do that. And this applies to most of the things. We are very much accustomed to instant gratification. We are all dopamine junkies. And we want everything almost instantaneously. So the point is, like, if you want to approach and to keep your customer, you need to do it in the right way. And the way to do it is provide perfect UX, do it via mobile channel, and make the client feel special. So what's very much applicable to most of the clients is that they're all very delicate snowflakes, the individuals who are expecting to be treated as such. The second thing is, yeah, the fintechs appeared. So the traditional banks, as we said, needed to kind of catch up because there was finally competition. And on one hand, as a banker, I would say, yeah, it's pain in the neck. On the other hand, it's a very good thing because it stopped us being lazy and it pushed us in the direction of development of banking. When I was changing one of my jobs in 2009, I had a talk with a board member, and he said, "Well, why are you leaving?" I said, "I want to do something interesting. I mean, maybe I do it in another bank." And he said, "Yeah, if you want something interesting, just change the industry." I was like, "Why?" He said, "Yeah, boring banking, bread and butter banking is one of the most boring and non-changeable industries in the world." And I would say, fast forward, he was gravely wrong, but he was a treasury guy. So probably a little bit different mindset for him. But all in all, fintechs pushed us forward into catching up with them. And finally, we're all currently in capitalistic system. And this means that you are expected to deliver more value every year. And this is done by in two main ways. And this is like increasing the profits or increasing the revenues or decreasing the costs. All in all, any of these two options means that you need to increase the efficiency, improve the processes, reduce costs, etc. So all in all, what we see in AI, machine learning, and all the relevant disciplines, it's quite helpful in this regard. For example, with these software robots, how they call it, you can eliminate up to with one robot, you can eliminate up to 5 to 6 manual workers that are doing data input, for example, or verification, etc. With the AI and more sophisticated methods, and with more sophisticated, I would say, these AI agents, you could automatize quite a lot. So we're not talking about 5 or 6. Today, we're talking about tens of people. So let's just cover the main approaches to digital transformation. So first of all, it's a buzzword, and as a buzzword, it's probably digital transformation means different things to different people. In general, some people mix it with digitization, which means just putting into digital format the physical version of data, documents, whatever. Definitely, this is not a digital transformation. The others are considering this to be just copy pasting your existing processes to digital format. Again, this is not it. The wholesome digital transformation means that you both do the digitization, you change the processes, and you try to put whatever you can to the digital channel. Internally in banks, I mean, there are many approaches, many banks, many institutions, but the most three common approaches is who's the owner of the digital transformation. So the technical approach means that this is coming from the chief organization officer of chief information officer, depending on the organization. And this is a purely technical approach. This is usually motivated by the fact that this person, this C-level person, has IT infrastructure and IT development located with him. So whatever you need to do, it will be easier to come from this part. So yeah, that's true. The negative side of this approach is that, first of all, it's usually very technical based, and the ability of CEO or CIO to recruit wider, I would say, part of the banks to do the transformation is usually quite limited. So what you get is you get the perfect technical solutions, but people are either not using it, or the solutions, if their end solutions, are not modified and to the point that it's something which provides the good UX and acceptable UX for the end client. So you get basically frustrated bankers asking themselves why the client is so stupid and not using the solution as the God intended it. And the problem is you made it for yourself, not for the client. You have the other CMO, Chief Market Officer, leads it. That means that it's the sales approach. Usually there's a very simple clarification for this. This guy's in charge of the revenues, this guy's in charge of the profits, and he should guide the digital transformation of the bank so it serves the sales. Not a bad idea. Sometimes even led by marketing part. The problem with that is that if the organization has silos or it's resistant to change, usually the power of CMO is not so big as the one that has the person in the next approach, and this is the CEO. This is the most holistic or wholesome approach to the digital transformation. If it goes from the top of the organization, it usually will be successful because he's the first, or she. This person is first among the equals and has the best strategic overview of all streams. So the motivation of the participants is quite different if it's being pushed by the CEO. Again, and this works even for the change-resistant environments and the silos, because if there is somebody who can break the silos, this is the first person of the organization. Again, there's no definite solution, pros and cons for all of them, because usually, so the con for this one is the CEO has a wide range of responsibilities. And sometimes if he's too thinly spread, then there's not enough push. So all of them can be a good approach, but still it's very specific and organization relevant which one should be chosen. Finally, how you do it? There's several of the parts of this recipe and how to do the transformation. but it's quite standardized. So basically, I mean, the very basic and the easy part, I would say, is you start with scanning what you have in terms of the technology and your legacy systems. Again, this is the easy part because with machines, it's fairly easy comparing to human. On the downside of this part is that many large banking groups that exist for tens of years or more are basically were either very slow or decided just to start after many unsuccessful tries to start parallel systems because the legacy systems were written in the ancient computer programming languages, and the last person who knew how the legacy system works probably is in pension for 20, 30 or more years. So this is fairly easy comparing to the next part, even though it's not that easy. It can be solved. There are ways. Deutsche Bank, for example, after trying to do something with the existing legacy system, decided after 7 or 8 years it's just waste of time and energy, and started building a parallel system to the legacy system. How this works, honestly, I don't know, but it works. Obviously, it's a Deutsche Bank, so they made it somehow. The very hard part, and I think the essential part of this transformation recipe, is the culture. I mean, as to quote a very famous saying that culture eats breakfast, culture eats strategy for breakfast. That's very much true, because the culture of innovation doesn't mean only having an agile mindset, using Scrum or Kanban or whatever. It helps quite a lot. But the culture of innovation means that the institution accepts the mistakes, learns from the mistakes, that people who are doing it are not punished if it's not intentionally done, but they are free to test, they're free to experiment and to do something new. Otherwise, I mean, the only way not to make mistake is not to do anything. And if you want to be innovative or do the transformation, definitely not a path. And the worst part of some organizations, very frequent, I heard it many times, is like, why change it? We did it like this for 20 years. Yeah, because it can be done better. Establishing innovation labs, special teams is essential, and it's very essential that these teams are diversified so that they can be the apostles or the kind of the positive virus of the organization who would prove that what is being done works. It's very effective, it's very cool, and that slowly everybody wants to be part of it. This is the ultimate achievement in this part. Enhancing the digital capabilities. I mean, basically, you dealt with your legacy system, you prepared people for this. Next one is basically checking what you need to do, all the products that you intend to offer, all the processes that you intend to use, what you need to do it to establish a platform. This is quite a costly part. I mean, talking to some of my colleagues and ex-colleagues just to work on the AI part, to even smaller banks, this is something which costs millions of euros. So, I mean, if you're going that way, definitely the support of top management is needed, and especially the CFO, because ROIs are not so easy to achieve, but they are necessary. This is not something that returns, this is not an investment which returns in 1 year. If you want to do all that, you need data. So leveraging data and analytics, quite important, be it for the internal cost cutting, process optimization, or to what you will offer to the end consumer, it's essential. The biggest problem in this part, what I've seen in the banks, is that usually how it has been done in the past, you have a lot of silos. So risk has their own kind of controlling or data guys, sales has their own, financial controlling has their own, etc., etc. So it's an art. Centralizing all this and getting the central data governance within a financial institution, within a traditional bank, incumbent bank, that's extremely important and not so easy, because this means that all of these parts of the bank and all of these board members need to do a leap of faith and basically give the control to some centralized unit. At the end, in almost all the cases, actually, in all the cases that I've seen, it works and everybody's happy at the end, but it takes a lot of blood, sweat, and tears to come to this part. The next part is, it's great if you can do this collaborating with fintechs or tech fins or whatever you choose. But the collaboration is important because there are not many banks in the world or organizations that can do everything in-house and that can deliver literally the widest range of products to the end customer all by themselves. It's costly, it's time consuming, and at the end, you cannot be specialized for everything. And if you combine it with the present tendency of cost cutting and FTE reduction, it's kind of impossible to do all these things and do very heterogeneous development in all of the areas. So all in all, instead of fighting the fintechs or insurtechs, sometimes it pays off to work with them, because what the past 10 years proved to us that there's enough space both for the incumbent banks, fintechs, and the traditional banks. And I think the answer is not waging a war against each other's, but collaborating, because it's a win-win-win situation. It's for the fintech, for the incumbent bank, and at the end, it's for the customer who gets the best service possible. And at the end, this is very much the upscaling and reskilling of employees. This is very much connected to the part of the fostering the culture of innovation. I mean, at the end, every human being has one question mark with every initiative that's being executed, especially the transformations. And this is, how does it affect me, or how does it benefit me? I would say that the biggest subtle blockers of digital transformation could be the people inside of the branch network, for example. And that's very understandable, because the question is, if we push everything to digital, we don't have jobs in 5 or 10 years. The point is, this very nasty tendency and trend that was starting to rise some 10 years ago, saying that, okay, we will close all the branches, fire all the people, and at the end we will just have everything done on the machines or via mobile app. It's proven it doesn't work. First of all, for many reasons. I mean, if you look at some of the research is done by McKinsey and Kearney, you can see that the adoption rate, it's quite high, but at the end, between 10 and 12% of consumers, the clients, prefer knowing that there is a branch of the bank. They might not enter it, they might not use it, but to them it gives some kind of peace of mind that it exists somewhere. The second thing, and this is the weak point of many neobanks, is the approach to customer satisfaction and the customer support. So I talked 2 weeks ago, I talked to one of the C-level guys from Revolut. And I asked them because I had a problem with Revolut some 6, 7 years ago, and it was a nightmare to get my money back, and it was because of their algorithm. And he simply said, "Yeah, you know what? You're right. But we are growing. I mean, my ex-company is growing so fast that if we lose you or 10,000 more clients, it doesn't matter. We have enough clients coming." Of course, this was quite unofficial, but the point is that basically, if you are not Revolut and you don't rise so fast every day, if you're just a normal, regular, traditional bank, definitely you don't have the luxury of keeping your clients dissatisfied or just losing them. You try to increase the stickiness. And the second thing, aside from the physical branches that help with the confidence of the clients, it's the customer support. This is something which needs to be provided to the client and not provided by a chatbot. Chatbots are cool, they're nice, they're very modern, nice to have, but at the end, if you have a problem, you need a physical person to talk to yell at, to complain, to do whatever. And if this was between 10 and 12% in the researches that I've read, 18 to 20% of the clients felt more confidence if there's a actual person talking to them and not a chatbot. Coming back to the point, upskilling and reskilling of the employees. The key from the banking perspective, management perspective, but also from like human perspective, the key is not to fire all these people because they have their place. If you look at the more digitalized banks in Western Europe, or they are switching to digital. I mean, I can speak of ING because I spoke to one of their guys, and they're saying some of part of the people left. They were ripe for pension or they wanted to change industry, but most of the people were re-skilled and taken into either contact center. Or they were basically they went to compliance, actually to AML, because the digital onboarding and eKYC is becoming more and more important, and they have their place. So the point is, do not fire people, just find a different purpose for them. And they're usually very skilled, very experienced, and they can be of a great value to the organization. So what's the future? I mean, nobody can predict the future, obviously, but there are some things which you see as the creeping around the corner as the next things. So definitely the adoption of artificial intelligence is something which will continue to happen. Blockchain that was kind of beginning to appear in 2010s now finally is getting its full use, and the digital ecosystem and embedded finance. So AI in banking, just to be short, I mean, it's not a silver bullet. It cannot do anything or everything. Definitely not. If anybody tried to use ChatGPT for more complex tasks or for something creative, you know what I'm talking about. So it is there. It will become more omnipresent. It will become more important. It will become more intelligent. But at the end, it still cannot solve, and probably will not be able in a few incoming years to solve some very tangible problems which you have in the process. So chatbots, as we said, they cannot replace the live support. I mean, everybody tried, and chatbots are quite good for the first tier of support. But if it's something complex, definitely you need to transfer it to a human being. Predictive analytics, AI is a champion in that. But the problem is when you get the predictive analytics, somebody needs to put it into an actual practical use. Somebody needs to do the execution, to formulate the strategy and to execute the strategy end to end. AI cannot do that still. Customer insights, I mean, what we needed, complex CRMs with implementations of 1 year, 2 years, I don't know, extremely complex to integrate, to implement, and some of them to use. Now you get it in matter of months. And the level of insights which is provided by AI, it's just amazing. But at the end, when you get the analytics, somebody needs to do something with it, and AI is still not capable of doing that. But all in all, some positive things that I'm not against AI, definitely, but some very positive cases and very good applications right now. It's the cybersecurity. I mean, it's the number one. From the point that they can analyze your voice, which is very specific to every living person. It's a kind of the same principle as the fingerprint. So immediately knows if somebody is trying to impersonate you or not when you call the call center. Then the credit scorings, then AML monitoring. I mean, done in seconds. And the regulatory part. One of the things which 1 year ago when I joined this bank, we were talking about as a wishful thinking, and it would be great to have a database and a kind of AI agent which can when you want to do a new product, which can go through the whole database internally of the bank and the regulatory database and tell you, first of all, if your new product or your new idea or your new process is something which can be done. If not, what should be done to modify it in a way it can be done, etc., etc. I mean, we came to the point 2 months ago that we were talking with a company which provides such solutions. So, I mean, it's amazing. And definitely this is something which in our bank, where we have a large amount of internal documents and rules, can save us months in go live. I mean, from the idea to the market execution, it can save us 6 to 7 months, which is quite good. Blockchain. I mean, I remember every year you have a different kind of buzzword and a different kind of trend. So 10 years ago it was UX, CX, UX. Then 9 years ago it was blockchain. The problem with the blockchain, now it's AI. But the problem with the blockchain at that moment when it appeared, there was an amazing quote saying it's a perfect solution for the problem which was not yet invented. So this was 10 years ago. Now we see practical adoption and practical use of blockchain. I will not talk about it because, as I know, Thaisa, there's a different degree specializing in blockchain. So this is not my part, but I can say that in terms of banking, it managed to enter the parts of crypto with the stable coins, with the money transfer and remittances, with the real estate, and some of the people I know. I met some of the guys working. Originally working for University of Columbia in New York, that are now trying to connect the blockchain with the mortgages, basically with the real estate. So, I mean, if they manage to do that, it will be quite amazing. And finally, my kind of favorite topic is the embedded finance and digital ecosystems. I could talk about this for hours, but I see we have less than maybe 15 minutes. So all in all, what's the point of the digital ecosystems? What we can see as financial institutions and as banks today, it's that clients are not as loyal as they used to be 15 years ago, 20 years ago, 40, 50 years ago. I mean, the generation Z or Z, depends where you come from, they have different standpoints than millennials, definitely than boomers, etc., etc. The point is, like, they don't care. They don't care if it's the institution is called ING or Moldindconbank or Chase Manhattan Bank. What they care is the service they get and basically the need they want to fulfill. So the point is like if you want to remain relevant, you cannot just count on your reputation or the brand. You need to see how you provide. So it's not only the service, it's the delivery of service. And I had an interesting question some months ago on one of the conferences that I was speaking, and they said, "How do you see finance in future?" And I say, "I see it like electricity. You don't see it happening, but it's everywhere around you, and it's basically enabling things to happen." So exactly this is how the finance should look like. But until we get to this part, the ecosystems are one of the ways how to get the customer, the client, closer to you and more loyal to you. If you provide everything he needs in a very client experience friendly way, he will use you. So the digital ecosystem means that you're not providing only the banking services, but you're providing various services to the client, which he or she might need. What you can see on the picture is something which was started very visionary-like by Hungarians. In Hungary, some 10, 11 years ago, it's called Simple. It was developed by OTP, and now it's a separate company. And what they did, they basically, besides the payments that you can do, P2P, you can pay the parking, you can pay the vignette for the highway, you can pay for meals, you can even buy some tickets for theater or for cinema, etc., etc. And the idea about that is like you have a mega app instead of having 10, 15, 5 apps, you have everything there and you know it's safe and you know it's good UX because it's provided by a bank you trust. So it's kind of a win-win situation. But this is one of the approaches, and this is a closed ecosystem, meaning that the financial institution is like very strictly regulating who enters the ecosystem, meaning that they make a partnership with insurance to provide an insurance or insurtech, or they do it with the state for paying of some taxes or utility bills, etc., etc. So this is one of the options. The second one, it's open marketplace where you're very liberal and you just set the minimum of security standards and minimum of the quality standards, and you let various companies enter your marketplace. And this is where it's kind of compliant with the PSD2 regulation and the open banking, because the idea is very democratic, that anybody can enter it and offer certain kind of services to your marketplace, be it the automatic bookkeeping for micro entrepreneurs, or maybe being the media market who sells like appliances, where you can take a BNPL. And the bank has an interest with that because this is probably regulated by a fee or some profit split between two partners. So basically, this is it. From my side, I try to keep it fairly simple because not only bankers are in the audience, and on the other hand, we are bounded by time limitations. So if there are any questions, I'd be happy to answer them. Maybe Thaisa, we can switch from the presentation to the screen.
Let me switch the screen. Let me share my screen again, and we have some questions here.
Sure.
The first one is, how do banks balance investing in digital channels with maintaining the role of physical branches, especially for more traditional customers? In your experience, what is the ratio between investments in new digital technology and physical branches?
Yeah, thanks for the question. So basically, very good question, because I mean the initial approach was, yeah, we'll just close all the branches, we'll save a lot of operational expenses and use that money to invest. So from the left pocket to the right pocket. As I said some moments ago, that the point was not to. I mean, you have to rationalize it, but on the other hand, you cannot kill your physical network unless you're a neobank or a fully digital bank, which I would say not many of traditional banks manage to pull off. Usually, it ends up in a disaster where you destroy your own brand. So the answer to the question is it's a combination on one hand of getting the funds from the cost savings. On the other hand, you definitely need to increase the expenses because this is something which will either bring you, which will save you for losing of the revenues and losing of customers in the future, which again means money. Or the second option, it will bring additional revenues to you on top of what you are already making. So there's no unique answer, but it's basically a combination of both.
Great, thank you, Peter. We have another questions. In the transformation journey, which are the most common case for digital transformation in traditional bank? And which approach, CMO or CIO or CEO, that effective for pushing digital transformation?
Well, it's very again, good question, but it's very dependent on the person answering it. I mean, I'm the guy who came from the CEO background. I came from this stream originally. I mean, yeah, my original background is sales and everything, but in terms of the change management, I came working with the CEO. And the point of this, again, I will tell you that I think the CEO approach is the best one if you have a focused enough CEO. And that if you don't, you need to pull some weight as the person doing it. So the point is like CMO, I would say like CEO approach, CMO approach, and at the end, definitely my least favorite is the technical one because it's usually just you do the hardware, you don't do everything else which is needed. So, did I miss something, Tessa, or I answered the question? I cannot see it in the chat.
It's in the Q&A because we have also a part
Okay.
here with the Q&A.
Okay, sorry.
So, and which
Okay, I'm
approach?
looking at both. Yeah. I would say CEO. My personal, but it's again my background, so this is it.
Perfect. I will get this. We have another one. Peter, from your experience, how do you balance speed to market with stability and regulatory compliance, especially when customers expect rapid innovation? This is in the chat.
Yeah, I see it. Now I have both things open. So yeah, thanks for the question. That's the essential. That's finding the right balance because if you're too fast, probably you're doing something which you will regret at the end. And if you are too careful at the end, probably the competition will just run past by you. So I would say the secret to the balance is having a very proactive and very collaborative compliance, AML and controlling functions, telling you what's the absolute minimum that should be done, and find the way how you need to execute something. Because the easiest thing is saying no. And unfortunately, in many of the banks where I worked, this is what you get because there is no risk for them. The key to changing this approach is having the people, having the KPIs also on these functions. So, it's not about how speedy they can, how quick they can answer to you. It's what is the answer. So, of course, it's a very sensitive subject, but this is it. So KPI is not only for the sales or for the front people, but also for the controlling function in a way which doesn't endanger their main purpose being a controlling function.
Perfect. Thank you, Peter. And the last question, I will do this one from the chat. Based on your experience, what are the essential activities when launching a digital transformation initiative? Which one or two are truly indispensable for its success? Thank you.
Yeah, so I would say that for me, the essential of everything is the culture and the people element. Because if you fail that, you can have the best technical solution, you can have the best plan, you can have the best strategy. So this is, I would say, number one, then like three empty spaces, then the next one. But building the culture of innovation and giving the purpose to people who will be changing their giving the purpose to the people that will be affected by the transformation, it's the key to success. So because this subsequently means that the silos will be broken, that nobody will sabotage you intentionally, that people will want to be a part of that, that people will not be afraid. The main, I would say, disruptor, the main break on the road to innovation, to digital transformation, that's the fear, because people are afraid of unknown. And if you're doing something new, of course, there will be many questions. There will be many unknowns on the road. But the main role of the person or the team who is kind of leading that, who is owner of the transformation, is to manage that. And if this is managed in the right way, usually all the other parts will fall into their place.
Perfect, Peter. So I think we can finish. Now, do you want to leave a message to our audience?
Yeah, I mean, if somebody has some additional questions, please connect to me on LinkedIn. If you're thinking about the MBA, and this is not a paid message, so really, like alumni of this institution, I can say it helps, and it's worth it. Sometimes not in an obvious way that you will learn everything new. You have some knowledge, you have some relevant knowledge in your area, but it will help you get a systematic, scientific-based knowledge. Second, when you see the other people from all around the world, it helps with the self-esteem also, because you see that you're quite comparable to most of the very good professionals around the world. And at the end, MBA still means MBA. So all in all, this is my message regarding the institution and ZIGURAT and University of Barcelona. And finally, regarding digital transformation, I mean, literally, my message is if you manage the cultural change and the people, everything else will fall into place.
Perfect, brilliant, brilliant. So thank you so much, Peter, for today's session. It was insightful and really interesting for me. And I'm an architect, but I was paying attention today. So thank you
Faith.
for this session. And thank you all for joining us today. So stay tuned for our upcoming masterclass and professional development opportunities. Until next time, stay curious, stay connected, and take care. Thank you so much.